Thank you, Dr. Professor BIENERT. Now, and we have one Q&A question, but we will answer that at the end of the session. Yeah. Okay. And now let's welcome Dr. KWAN, Director of Sustainability and Risk Governance, Link Asset Management Limited, to talk about best practice case studies from industry leaders. Okay. You may start out, Kevin.
Dennis, thank you very much. Sven, good to see you, and good to hear the updates that have been presented. Before I share my presentation, I'd like to give the caveat that our initial experience with CRREM was earlier on, and since then, Sven, you've made significant improvements into the model as well. So some of my results are out of date. But I think that the findings and the learnings are still applicable to people who are just starting or trying to figure out whether to use this. So allow me to share my screen here. And there we go. You should see my screen. And good, I can see that there. Good. Now, just for some background for those participants who are not familiar with Link Real Estate Investment Trust, we are actually Asia's largest REIT with an AUM of over 230 billion Hong Kong dollars. We do manage and invest in a diversified portfolio. At the time of the CRREM model that we tested, we were primarily in retail facilities, car parks, and offices. Since then, we've expanded over to logistics. So that is one of the changes since we've started this particular process. Our vision is to be a world-class real estate investor and manager, serving and improving the lives of those around us. The reason why it's important for me to highlight this is because that's one of the reasons why we decided to use CRREM, to figure out how do we make sure that our portfolio is climate resilient. What exposures might we have to some of the physical and transitional risks that Sven has mentioned? And from that, communicate back to our investors so that they know that they are working with an organization that understands resilience and is constantly improving and upgrading the portfolio. When we come down to the bottom part, looking at why we wanted to do this, as I've mentioned, is part of our vision. And it's also because in 2021, we announced our net zero strategy. And then in order to achieve that, some of us, we have to figure out what our carbon exposure is. And we felt that a lot of the models were actually coming out from Europe. There weren't too many models in Asia. And there was this program with CRREM, and it's an opportunity for us to understand some of the exposure. Furthermore, we've been getting increasing questions from investors about our carbon risk, our carbon exposure. And again, a lot of those investors are based out of Europe. So CRREM has been a model that is used in Europe and understood by the investment community. And therefore, it seems to be a natural transition to use this particular model. Now, I will say that the second point highlights some of the challenges that we've encountered earlier on. In the sense that the model itself was really focused for the European market. At that time, Asia was, there were fewer data points, but you've also since heard that the data points for Japan, Australia, Singapore have made significant improvements. The last point I'll say on this is that it has been a process of trial and error. We do have a small, range of asset types that we were working with. We've since expanded over to logistics. What we have noticed is that the EUI for all these types of properties all vary by geography, by use, and so forth. And it means that this particular model needs to keep on evolving, keep on changing and improving. Just some visuals on the spread of the properties that we put into the CRREM model. You'll see that we have properties over in UK, Hong Kong, Australia, and mainland China as well. What's also interesting, again, on the lower left-hand side of the screen, you'll see that at the time, the CRREM pathways that were involved or available when we ran this. And you'll notice that largely these are European countries, very few Asia-based locations, with the exception of Hong Kong, Japan, Philippines, and so forth. So that was, we ran this model using the best available information at that time. Now, I guess I can give you some insight into really the experience and key challenges. One of the challenges that we ran into for our portfolio was really the split between tenant data, landlord data, and the lack of tenant data in certain situations. For those of you who aren't familiar with Hong Kong, we actually don't have tenant energy consumption data. That's actually private information that's just for the tenant, so therefore we don't have access to it. Without that information, sometimes it's difficult to get a holistic and comprehensive understanding of the EUI of an individual property. Now, this is not necessarily the case for mainland China and other jurisdictions, but this is one thing that we had to keep in mind. The second point is actually about the carbon pricing. So Sven mentioned earlier the issue about carbon transition and looking at carbon pricing. We are just entering a carbon market. Some of you in Hong Kong know that Hong Kong Exchange has started announcing a climate change, a carbon market, voluntary carbon market. We know that we do have this over mainland China. I think that if I remember correctly, I think the price was roughly $10 per ton, a very significant difference from what the price is over in Europe. But I do believe, and industry does believe, that this price will be increasing. We also do have carbon markets in Singapore and parts of Australia as well. So as these continue to mature, the transition risks associated with carbon will likely be more robust as we move forward. The other key challenge was that when we're looking at the CRREM model, it does ask a little bit about how our future plans are for minimizing and reducing our carbon footprint. And there were some challenges in terms of balancing what are the future energy savings initiatives, the capex that we might be spending, and also how do we tie this in with carbon reduction, right? Yes, those two concepts are linked, energy and carbon, but they are in some ways different as well. Carbon reduction can simply rely on grid, the grid making improvements into their fuel mix, and some of that information from the grid may not be as transparent. So we did feel that some of the initial assessments may have skewed our properties towards a higher EUI or higher decarbonization pathway that would be needed. From this, I think despite the challenges that I've mentioned so far, and especially given that it's the Asia challenges, what I can say is that the assumptions were common across the entire portfolio. So what that means that even though the assumptions that we made were not 100% accurate, there is an ability for us to prioritize our properties based on the assumptions, and the consistent, I would say, errors allow us to prioritize our properties to identify which ones are high risk, which ones are low risk. And again, I say this with the caveat that we did this about a year and a half ago, and improvements have been made to this so far. The key thing that we learned, this is a good way for us to identify the properties that are at high risk. And then you'll see under the takeaway lessons, the first point on there actually highlighted that our retail properties have on average a 1.5 times higher EUI than office buildings. Now, this is quite useful information because then it gives us some insight into how we might want to structure or manage our portfolio moving forward. From a decarbonization perspective, are we better off moving towards an office portfolio, logistics portfolio, and so forth? So that's some of the strategic decisions that the CRREM model provided as well. The other aspect that we looked at was that if we just look at just the retail properties, we started noticing that there were certain retail properties that had much better performances. And this comes into that asset level gap. And when we looked at this, it actually is a good way for us to quantify some of the capex spending that we might have invested into a particular retail property, and then seeing that EUI and that projected decarbonization pathway is much more amicable compared to properties where we may not have invested so much. So this actually is good for us to use in terms of internal strategy, thinking about where to invest and how much to invest in ongoing decarbonization efforts at the asset level. So the last point under the key takeaway is that it does, at the time of the particle pilot, I think that we had a call with Julia, Sven's colleague, and we were shocked that I think by 2050, the results indicated 80% of our portfolio may be considered stranded assets, given the particular carbon scenarios that we looked at. But what we also found was that some of the stranded properties, it actually gives us an opportunity to figure out how do we reduce it? How do we fix it? How do we mitigate it? I mean, it gives us roughly 25 years to kind of figure out what to do with this particular asset. So it can be used from a strategic perspective, and that's what I would encourage a lot of organizations to do. Use this as an initial assessment to see where you stand, how your portfolio is performing, and you don't have to compare to other portfolios. It is at least giving you insight into your own particular portfolio and where you stand. Coming down to the last point on this particular slide, what conclusions did we draw? Well, again, it's the ability for us to look at asset by asset performance in regards to the decarbonization pathways that we need to look at. I think that since then, CRREM's also started working with GRESB SBTi. So from my perspective, being able to work with the CRREM model and put information in here or through our GRESB submission, and not having to repeat that information has been instrumental in terms of efficiency as well. We are seeing more investors asking us this question. Are you doing specifically the CRREM assessment? How are you factoring in the carbon risks into your particular portfolio? And this has been a useful process for us to learn and continue to build upon. What I do look forward to doing is rerunning our portfolio to the new CRREM model, given the recent updates that have been made as well. Hopefully, I'll cross my fingers, hopefully the results are better than what we had last time. But Sven, thank you very much for updating this. Dennis, thank you for having me on this panel.
Thank you for the sharing.